The doom of Adobe might be reported a bit too soon. What's the opportunity that we're seeing?
This might be Adobe's PDF 2.0 moment right now. Let's hear more on the Altimetry Authority today.
Let's talk earnings and
GAAP accounting.
favorite pastimes.
So let me just say, earnings
Wall Street.
It's
why do they
2.5x.
because their compensation goes up.
Wall Street's wrong again. So Joel, everybody has been talking arguably since ChatGPT came out, and really probably I'd say a year and a change ago after ChatGPT came out and people really started to figure out how to use it for images and stuff, that Adobe was doomed, right? Everybody's been basically saying this idea of, hey, look, Adobe, you don't need Photoshop when all of a sudden everybody can make every single image under the sun on their own using an AI tool. And right, because of that, the stock's down 40% in the last year. But what was really interesting was, right, the market's kind of neutral reaction to what happened just recently, which was obviously a week or two ago, when Adobe came out for earnings and basically said, right, Joel, AI is not something we're worried about. In fact, it's something that we're seeing really, really strong fundamental momentum for, and we're actually knocking the cover off the ball. What, Joel, they raised guidance, they beat on results, and if I remember serves me correctly, we saw some interesting stuff with our earnings call forensics for it too, right?
Yeah, let me just remind everyone that Google completely screwed up all its AI in the beginning. Gemini was laughable. The image creator was a joke. It was filled with political bias of one way or the other. I mean, it was terrible. But because Google has YouTube, because it has its installed base, because it has all this amazing content, because it's already indexed the whole web, all right, so it's all available easily for them to program into, Google has now come out with fantastic AI, even though they missed the ball completely. This is one where I don't think Adobe missed it. I think right away they said, we're either going to build AI tools on top of Adobe with our installed base, comfortable with using it, or we're dead. And I think they went in full throttle. And because of it, I don't believe you're going to have people suddenly switching that, designers and creatives and artists that have been using Adobe for years and years and years and years suddenly say, I'm going to walk away, because as long as they provide the kind of AI tools that they're providing, this is a great opportunity. Now, from a forensic standpoint, we listen to the earnings call of management. We run earnings call forensics. We want to look at we do the same thing with the numbers. But what do you find is a lot of forensic accountant types like me, we want to see, do the words match the numbers? And then do the tone of voice, does the tone of voice of the words being spoken match the words and match numbers? And this is one where there's some fantastic technology out there. They're doing some kinds of voice stress analysis. And management comes off giddy. They come out excited when they talk about exactly the things that would make you be interested in this company, albeit after the stock has fallen 40%. I mean, so this is one where it's like, okay, it looks like it's bottoming, but man, if there's a time to start dipping your toe and legging in, we're going to show you the numbers in a second, and you're going to have to look at this and say, if they really are dominating in the AI world and they're going to maintain their installed base, which I think they can, there could be a lot upside in the stock.
Well, I mean, Joel, to your point, conviction and giddiness, everybody, when we run our analysis, when they talked about their earnings trend, when they talked about AI adoption on things like Firefly and their Adobe Acrobat AI assistant, highly confident markers conviction when they talked about running $5 billion plus in AI native revenue. And yet, when all that is coming out, what happens? BMO Capital Groups decides, you know what, this is the right time to cut our price target from $450 to $405 after the stock has already dropped, right, again, 40%, just for context. That's BMO right there. And the reason why, Joel, I think we would both agree is, I mean, one, they're listening to the easy narrative, not the hard narrative, and two, is, Adobe is a classic example of a company, right, where as reported metrics mask how profitable this innovative firm is and how much it's fine in the AI boom and innovating the cover off the ball, right?
Let's take a look at the numbers. All right, so this is the GAAP accounting. All right, this is the as reported. This is how the accountants punish innovators. They punish companies that invest in R&D. They punish companies that invest particularly in software, the way software is handled also, software expenses or the way it's capitalized. Now, here's the uniform numbers. So this is economic reality. This is the level playing field over the last 50, 60 years of all companies around the world. And you see that this company has a 50, 60% return on assets year after year. This company mints cash. It's their market to lose. It's theirs that they dominate. And as long as they continue to invest, and the way you know they're investing is because the big difference, one of the big differences between the blue and the orange, meaning the as-reported orange and the true, is that GAAP accounting expenses research and development instead of capitalizing and treating it as an investment. And when you treat it as an investment and say, all right, it's an investment like machinery, like plant and equipment, that you then depreciate or amortize as opposed to, oh, it's just another cost of goods sold, which is ridiculous. You see that this company really is minting cash. Now, Wall Street is expecting that for the next 2 years, that this is the pro forma financials. So this is kind of amazing. This is where Wall Street always, we completely ignore the buy, hold, sell recommendation, which is just nonsense and has almost no track record of ever working, right? Almost no track record of ever working. We almost always ignore the target prices, although it's comical to sometimes look at to see what they're doing. But the analysts are required to put in a pro forma forecast. They put the pro forma forecast in the back of the research. We collect those pro formas, the line-by-line forecasts, and we aggregate them. And we're like, this is an unbelievably bullish Wall Street. So for whatever they're saying and complaining and just jumping with the herd on this one, you can see that when they build up their individual returns for this company, that the return on assets, the profitability is reaching all-time new highs for Adobe. I mean, you're talking about Microsoft-level returns, Apple-level returns, NVIDIA-level returns, at least in the same ballpark. Global corporate average return is 6%. The U.S. corporate average is 14%. This company is around 60 and expected to rise to something like 70 to 80 by Wall Street. Now, what's priced in? The only way for us to get
Joel, really quick before we get to what's priced in, and this is important, everybody. Look, if you want to talk about the narrative of, hey, was Adobe a little spooked by AI? Uniform return on assets did roll over a little bit in 2023. It's still a phenomenal business, but like you might say, oh, maybe that was from generative AI, or maybe that was because of companies hangover from startups who leveraged Adobe's. But it is hard to argue with the fact that this company has strong fundamental momentum in return on assets and earnings growth rising. And so, Joel, to your point, now let's talk about what the market's pricing in.
And to get to this price, the only way to get to reverse engineer your way back to a $350 share price is to have returns actually go the opposite direction. So Wall Street is expecting the returns to go up. Fundamental momentum since 23 is up, meaning earning power is up. But Wall Street's still saying, yeah, but we think the bottom's going to drop out, right? That the way people thought about with Google when Google really messed up their, right, beginning AI, and people thought, oh, everyone's just going to stop using Google and they're all going to go to ChatGPT. And now you find Google's got some of the most amazing AI tools out there. I think people are finding that Adobe has some amazing AI tools that they won't go to some just upstart when they can put it all together in the Adobe suite that the install base knows. And if that happens, then this stock has 50 plus, maybe double in terms of upside. Maybe even double for a company this big.
Right, and that's why, just for everybody for context, that's why this is a name that in our Altimetry portfolios we recommend. And, you know, the best analogy that we can think of for this is, really, this is Adobe's PDF 2.0 movement. Because I don't know if everybody remembers, but back in the 1990s, when Adobe created the PDF, everybody said, right, Joel, oh, the paperless office is here. And then what happened, of course, was you got more paper and more printing because it was easier to share documents. And since it was easier to share documents, people printed more. It actually gave the printer a whole entire second life. It was like, well, you want to talk about AI and what AI is doing? By allowing people to create more images, it means you need more Photoshop to fix those images. And that's exactly where Adobe is here. And so everybody, this is why this is a name, Joel, to your point, that we think is really compelling right now.
Yeah, very interesting. It's got a lot of upside.
And so everybody, right, we've been asking you all, let us know if there's a company you want to take a look at. Well, one of our readers actually did ask us to take a look at a company in our comment section recently, and that company was Lumen. So Joel, you and I figured let's do our 3-minute drill, right, which is let's just get to the bottom of if this company is really interesting or not. Everybody.
All right, so
yeah, go ahead, Joel.
Global corporate average is 6% ROA. U.S. corporate average is 14. So here's a company from 2020 to 22 coming out of the pandemic. Its returns really skyrocketed, and then all of a sudden got punished in 23 and 24. And Rob, why did they get punished?
Right, and the reason why, everybody, was because Lumen, it's a ghost from the dot-com boom in terms of it laid tons of fiber optic cable for decades, and then basically it tried to monetize that, one, by selling to corporates, but two, selling to consumers by selling them broadband, selling them internet access, and all those other things, which did great, Joel, right in 20 to 22, but now it's got a whole bunch more competition that's eating its lunch, and people aren't really using it as much.
Right. Now,
so,
the analysts think that 25 is going to be a really bad year. That 25, they're barely going to break even, right? At close to 0%. And then that they're going to rebound into 26, right? There's a rebound on 26. At the current stock price, you would need to believe that rebound from a really bad 25, and that rebound will continue into a 4 or 5% return firm. Not a great firm, but sort of priced for okay, so. The problem is you really need that rebound to occur. And you've got a company that it's fiber optics, so they're selling broadband, and then you've got Starlink popping up, and anybody with a clear view of the skies said amazing and wonderful things about Starlink and others. So a lot of competition coming in. I'm not saying that Wall Street might not be right, that they don't. Maybe they'll rebound at 26, but you're going to have to sit through 25 being a really bad year before you even see any of those opportunities. I would stay away from this name until you get much better information of what could happen in 26 and 27.
Right, because everybody, for context, the bull thesis, everybody, for this name is, hey, look, fiber optic cables, AI is powered on two things, electricity and data. And so we're going to have a whole lot more data going through fiber optic cables like Lumen, so Lumen must probably set up to do really well. Well, here's the thing. The tail that wags the dog for this business was the consumer business that let its profitability take off. The corporate business, while it's bigger by revenue, has not had as much of that, basically boom or bust situation. And you're already pricing in, Joel, to your point, that recovery of a lot of more corporates needing more data for the business with looking at the stock, with looking at the valuation that we are here. And we're not seeing the consumer side come. So yeah, Joel, totally agree with you. Everybody, this is one that we would say is an avoid. We're not saying short it, but we're saying this isn't one that we would pound the table on. Now, everyone, if you want us to look at a different company just like this and do our 3-minute drill, drop it into the comments, and feel free to give us a like and a subscribe. And we look forward to hearing back from you in next episode of Altimetry Authority. Thanks, everybody.
Thank you, everyone.